All right, guys, what's going on? This is Ryan, aka Cantor & Clark. And on behalf of my partner, Josh Rigger, and I, we just want to thank you for tuning in to the BlockRoots YouTube channel. It is 12:38 p.m. New York time on Sunday, July 12th. So we're going to do a little bit of a different video than what we normally do. As you can see, again, my face is in the video. I have a lot of hair behind this hat, or under this hat, so I'm wearing a hat because it's a bad hair day today for me. So in keeping with all of our other videos, even though this one is going to be a little bit more educational, a little bit less focused on where we currently sit in regards to Bitcoin price action. As long as you are a subscriber to the YouTube channel, if you leave a comment below, so those are the only two stipulations. If you are a subscriber and you leave a comment, you'll be automatically entered in to win $100 in Bitcoin. So we'll pick a random lucky winner. It's not a contest whatsoever, so it's not contingent on any kind of comment in particular. We're not rewarding good comments and punishing bad comments. It's strictly a lottery. So in this video, I want to talk about two things, two really important questions that we should always be asking ourselves. And it doesn't matter whether or not you're trading on the 5-minute time frame, whether you're trading on the 4-hour time frame or the weekly time frame. Okay, where is the market trying to go, and is it doing a good job of getting there? Okay, so we're going to talk about these two questions. These are questions that are absolutely paramount in any trading system or any trading approach. That's my opinion. And then we're going to talk about a tool that I use all the time. I know some of you get a little bit confused when I get into maybe my approach. It's a little bit more technical. I promise you it is very simple once you understand just what you're looking at. Okay, so we're going to talk about a tool that I constantly refer to. This is a tremendously useful tool, and I promise you that it's not going to be difficult to understand whatsoever, and that it is readily accessible now. A little bit earlier on, it wasn't as accessible. You didn't have all these third-party platforms and order flow sites and these tools available, at a free, well, rather for free. Okay, they were originally they were only available at a pretty considerable premium. So, for example, I use something like Sierra Charts. This is something that is not expensive whatsoever, but I understand that there are people that don't want to be paying for certain platforms just to have access to these tools. So I'm going to go over the platforms that I think are great, and you can go ahead and pick the one that you think is beneficial to you and that you really like the most. So where's price trying to go, and is it doing a good job of getting there? Okay, so what we're going to talk about is the concept of delta, okay, and the concept of order flow. So we talk about passive order flow, active order flow. We've mentioned this before in videos, so we're just going to cover this concept really quickly. All right, so delta is the difference between aggressive buyers and aggressive sellers. So when we're an aggressive buyer, and we'll just go on to Phemex's platform right now, and if you haven't checked out Phemex yet, be sure to check it out. Josh and I are partners with the team. It is a tremendous exchange. In the last 2 weeks, I could tell you, just from my personal experience trading on the exchange, the liquidity has improved drastically. So that's something that exchanges constantly have to battle. And it's similar to the concept of, trying to find a job and not having requisite job experience, right? How do you get job experience if you don't get hired for jobs? Well, how do you build liquidity if you don't continue to have more and more traders come onto the exchange? So when new exchanges come out, and when you have exchanges that are they're incredible exchanges on paper and they have all of the technical features you would want, the last thing that you really need is people to show up and trade on the exchange. Okay, so what we've seen in the last few months is a tremendous increase in liquidity, and I'd say that Phemex is on its way to being the #1 exchange. My personal opinion, but by all means, check out the link below, check out the exchange. They offer the fastest speed, so the fastest execution. So 300,000 transactions per second, which is the fastest matching engine that is out right now. Not only that, they offer traditional assets as well, and they have a fee-less spot trading platform. So we've gone over this platform many times before, not going to go too much further into it, but when we're talking about aggressive order flow versus passive order flow. So passive order flow is resting liquidity. So it is your limit orders. So for example, when we're looking at the ask or the offer, and then we're looking at the bid. Okay, so the bid, those are resting orders to buy. Those are people placing resting liquidity or offering resting liquidity to the exchange and replacing a limit order in order to get filled at a lower price than the current market price. An ask or an offer, sometimes referred to as, that is an order to sell. Okay, these are resting bids and offers though. This is passive liquidity. Now, what you'll normally find is that larger players will be transacting through passive means. One, because they're normally transaction cost sensitive, okay? And if they're trying to get in a large order, they're more than likely going to be trying to get in over time, and they're not necessarily as interested in getting in all at once. And time is not really maybe necessarily of the essence. So, a larger player getting filled over a span of time, they might place, a large amount in the bid. So using limit orders, buying with a limit order over time, and then the same idea with selling over a longer span of time. They'll probably try to get into the position or out of the position, whether or not they're closing out a long or they're opening up a short, through the use of passive means as well. Okay, so that's resting liquidity. That's passive order flow. All right, what it means is it's essentially an advertisement. It's saying, I need someone to hit this order. Okay, it is an advertisement to buy or to sell. Now, aggressive order flow is when you're jumping the spread. So aggressive order flow is if, for example, I go to market order, and this is the Phemex test video account. So there's actually no capital on it right now. But if I was to jump the spread and use a market order, so what I'm going to be doing is I'm going to be taking from the available resting liquidity. So let's say I place a market order to buy, right? So when I place a market order to buy, what I'm going to be doing is jumping the spread. So I'm going to be jumping the current market price, and I'm going to be taking from the available resting liquidity in the offer. So if I'm trying to buy, 2 million contracts at market, I might incur slippage because, as you can see, right at the market price in the first available offer, there's only 68,000 contracts available, right? So there's only 68 contracts on the offer. 68,000. Now, these near prices are constantly going to fluctuate. You have market maker activity right there. You have high frequency trading activity right there. I wouldn't say you could draw too much actionable insight from just paying attention to this static order book. All right, unless you have a little bit more of a more comprehensive order book, something like a ladder, something like a TT, or even like the order book that I have set up on Sierra charts or Jigsaw. You're not going to gain too much by looking at this, but what you can see is the available resting liquidity that you're going to be taking if you're going to be executing a large order. So if I place an order to buy, like I said, maybe 3 million contracts, not 2, I'm going to be eating up all of this resting liquidity. I'm going to be incurring slippage. Okay, that's an aggressive order. That's me taking liquidity. The inverse is if you're selling, right? If I'm selling and I have 2 million contracts to sell and I need to get out as fast as possible, I don't care about the cost, I just need execution, I'm going to use a market order. I'm going to be selling at market. I'm going to be taking the available bid. So I'm immediately testing that bid. We'll see if anyone stays in the way, right? We have to hope that there'll be the available resting liquidity there, but still I'll be incurring that slippage to the downside. So it's commonly thought that smaller players execute through market orders. Okay, smaller transaction sizes, smaller players, and larger players use passive means. Okay, again, for the reasons we laid out before, just some of those reasons. There are more reasons than just that. So what we want to do is find out where larger players are. And I'll refer to these sometimes as, the heavier hand versus the weaker hand. Now, the heavier hand operates through passive means. They operate through the use of resting orders, through limit orders, through advertisements, and again, over time. And it's usually that they're going to be using or they're going to be transacting on behalf of a larger amount. So they're the heavier hand, right? They're the dominant market force. And, passive order flow is going to normally shape the market. So it's going to shape the highs and shape the lows. It's going to shape the extremes of market structure. And then initiative order flow or active order flow or aggressive order flow is going to take us from point A to point B between. Okay, but passive order flow is going to be shaping the confines or the extremes of that market structure. So it's really good when we can begin to discern where that heavier hand is, where they're coming into the market at times, okay, where they are imposing their will on market structure. So what we can use is something called cumulative volume delta. So we're going to be using CVD, and this is something that's readily available on multiple platforms now. So I use Sierra charts. So when you look at my Sierra charts, it's not the most attractive interface, right? It's not the most user-friendly platform. It's a little bit clunky. It has a ton of features though. It allows for a ton of customization, and I've been using it forever, so it's a personal favorite of mine, right? Using what I'm comfortable with. I don't see any reason to change this because nothing's really changed with regard to what it can offer. Now, I understand that this might look like a complex platform. It's not easy to figure out. You know, you have to pay for this and so forth. But what you can actually do is you can go onto either tensor charts. All right, so you could use tensor charts free CVD. Tensor charts, I believe they also have a trial. It's at their premium membership is less expensive than Sierra charts regardless. So paying for the access to Sierra charts, paying for the data feed and so forth. So you can try out tensor charts, and you can also go to Exo. Exo is a phenomenal platform. They have a free version, they have a trial, I believe, and then they offer, again, a premium version as well. These people are not going to be offering products without having any kind of paywall at some extent, right? They're going to be offering something that's a little bit more premium than their free product. This just makes sense, right? They're in business for a reason. But regardless, even if you're into the premium membership and you're paying something along the lines of $20 or $30 a month, this tool is tremendously useful. Okay, so if you are going to be executing at market regardless, and you're going to be trading frequently, you're going to be paying probably that amount in fees. All right, so if you're going to be paying, let's say, 7 basis points, and I did an article recently for Phemex. If you're going to be paying 7 basis points just to be a taker, and you had 75 trades, and that's 37.5 round trips. Obviously, you can't do a 0.5 round trip. Well, actually, you couldn't do a 0.5 round trip. You'd have to take 75 trades. You get the idea. So 75 trades being a taker on a $10,000 account. After 75 trades, 75 trips, not round trips, but buy being one, sell being another. If you just finished at break even, right, for every single trade. So this doesn't incur the possibility of any drawdown at all yet. It doesn't incur any wins either. So, there's an argument for this, going both ways. But even if you closed at break even, through that execution alone, you'd be paying $722. So you would be paying, a considerable amount. I think it's around 12% just to close out flat each time, just to use a market order. So just to sell you on, and we don't work with Exo charts whatsoever. I'm just trying to say that for $30 a month, the way that this can improve your trading is far exceeds any kind of cost that you're going to be paying to use it. Any one of these platforms. Again, I don't work for any of these companies. Josh and I, BlockRoots is not affiliated with Exo. It's not affiliated with Tensor Charts. It's not affiliated with Sierra Charts, okay? But what CVD is going to do is it's going to show you the attempted direction of the market, okay? So when we talk about the two questions we want to ask, right? What direction is the market trying to go? Okay, meaning what direction are initiative buyers and sellers trying to take it in? All right, because we need an active order. We need an aggressive order to pull price in one direction either way. Right now, when we're looking at CVD, over time, we're seeing a running amount of that delta. So the negative delta when there's more aggressive sellers, the positive delta when there's more aggressive buyers. So when we see, for example, that in this case, we'll just go through this example, and this is on Sierra, it's on Tensor, it's on all these charts. So we're going to focus on this area right here. When we see that price is moving relatively sideways, so we have, for example, a low, a higher low, a low, a higher low. But what we have throughout the duration at is delta moving down. Okay, so that's the example on Sierra. And just to point out how it's available on all these websites. Same thing right here. We're going to change the ink color. All right, when I turned my head, you could see how long my hair is right now. I need a haircut. So for example, price action, just to generally capture it, right? Generally capture it moving upward, right? At least we have the example of, low and then a higher low over here, right? It's very obvious. Whereas with delta, we have a continuous downtrend. Okay, again, the same thing. We'll just go on to tensor charts just to validate this. So price moving slightly upward or sideways, right? Ranging, but we still have that aggression to the downside. So you see that example right there. We'll go to an example where this is doing this to the upside, right? Just to paint the other side. For example, we'll go to scroll back, and we have an example over here. So there are plenty of examples. You'll see that this is one of the most actionable things you could be paying attention to. So we're going to scale this so that you can see the difference. So we're looking at price moving down. All right, we're capturing where most of that activity occurred. You can see that that high is higher than that high very clearly. This is clearly the only area. There's a very tiny wick, so there's really no trouble discerning that, right? Meanwhile, when you look at delta, there is an actual increase in value. So we see that buyers got very aggressive over here, okay? And to the downside, in the other example, we see that right here, all right, so let me pull this up. We see that sellers got very aggressive. Now, that's not necessarily the important thing, right? We're going to see that sellers are getting aggressive, buyers are getting aggressive always. But what we should see is corresponding price movement with that, all right? Otherwise, what this is telling us very simply, is that price is moving sideways, but sellers are getting more aggressive and have been selling more than they were previously, and that previous selling yielded more movement in price action. So one of the things that we always talk about, and it should have been that I said there are 3 things that we want to ask, okay? The most important questions: where is price trying to go? Is it doing a good job of getting there? So in this case, trying to go is delta. So trying to go, sellers are trying to move this down. Is it doing a good job of getting there? No, not necessarily. And then from that, what is price not doing that it should be doing, right? That's basically both of those in one, right? When sellers are aggressively moving down or trying to sell and price is not moving down, what is that telling us? That's telling us that over here in this general area, there is someone absorbing that activity, okay? There's someone absorbing that selling pressure. Now, once we see that the heavier hand is on the other side of the direction that, let's say, you're trying to take, or if you're sideways right now, or rather not sideways, if you're not in position, once you spot the heavier hand, you don't want to try to fade that, right? This is the equivalent of trying to swim upstream. It is not something that is going to be easy to do. So we see that immediately we have that delta divergence over here. We could see that in the example, we still have aggressive selling into this low, but once we spot the fact that there was absorption over here, we know that there is now someone on the other side of that is trying to bid this up and protect this, okay? Over time, you could see that even in this example, if you've been paying attention, that this has occurred over a longer span of time than just this. You know, this is a 30-minute chart. This is right here. This is a 2-day range, right? 2-day range right there. That's great. That's good for an unwind that'll occur in the opposite direction. And what we look for is, we look for that impulsive move in the opposite direction, because what we had is aggressive selling into the low, and what you're going to see is more often than not this leads into a squeeze, which could have follow through, but what it sets up is for that trade to begin with, right? Where you're putting the other side, you're putting pressure on the other side of the market because they're trapped now. All right, and these are all things that we go over, and we're putting up right now. We're loading this new course. This is going to be a tremendous asset for anyone. So for any of you who are having trouble understanding this stuff, order flow and market profile, complete comprehensive course. Already I have 19 videos up, and we have about 30 that need to go up that I'm still uploading. And then this is going to be iterated on from now until who knows, right? As long as we see things that are worth pointing out and teaching, we're going to continue to do this. But what we see right over here, so we'll go back to XO. I think XO is probably one of the better platforms to use that's accessible. So not only do we see this delta divergence over here where we see selling got more aggressive but price didn't move further down, we've actually seen this over the course of this trend. Okay, so what we have over here is we have this low, we have a higher low over here, but what you can see immediately is that delta actually made a lower low. So what this is showing us, and if we zoom out now, what this is showing us is that this support is still acting as support. There's still someone protecting it. Price is doing a bad job of moving it. So once price begins to trade sideways at that point, if we're in a short position, more than likely beneficial to consider getting out of our position, or if we're sidelined, to potentially think about getting on into a long position, because at this point we know the heavier hand is below us. It's not to our benefit to try to swim against that current, right? So take a look at these tools. These are phenomenal. This is a phenomenal tool that I've used in traditional markets. I've been using this forever now. It has tremendous use case trading something like the E-mini S&P. Anyone who trades crude oil, you're probably going to see that they have this indicator on their chart as well. And again, what this shows us is, when we see that price action is moving one direction, and sideways makes a hell of a case. If price is moving sideways and we have delta continuously moving upward or continuously moving downward, that tells us something that is, again, this is something that is incredible piece of information to pick up on. Okay, so this again shows us where the market is trying to go, and when we see the price action is not following it, we have a really good idea of, at that point, what side we want to be on. Okay, because again, this is an indication of the heavier hand versus the weaker hand. And the weaker hand is typically the market order that's trying to move price in one direction, and the heavier hand is the thing that's stopping it. So what we're looking for essentially is, again, imagine it like this. If we're looking at individual candles and the delta within those candles, what we're seeing is, for example, in this case, that there is more of an effort than there was previously to move price action, and there's less of a result. All right, guys, so hopefully this has been really beneficial to you. If you want to check out any one of these platforms, go to XO Charts, go to Tensor. For those of you that have the time and the patience to figure out something like Sierra Charts, go to Sierra Charts. That is probably the most comprehensive platform. And if you want to learn more of this stuff, make sure that you go to BlockRoots.com and check out our platform. We have, not only do we have stuff on order flow and market profile, things that we constantly go over, but we have a tremendous amount of videos on other topics as well. We cover trading from, from the 101 level stuff to the highly advanced, graduate level courses, we'll say. All right, guys, so it's been a pleasure. As always, this is Ryan, aka Kenner & Clark. Exercise proper risk management and trade effectively.